everybody? We are back with another episode of Wealth of the Culture. I just want to say, we got my boy Brandon Thomas on here. He does. He's in the insurance field actually. So we haven't had a guest on to talk about this. I got questions. I know I'm talking to little people and they ask me questions. I don't have a clue what to do or what to say to tell them. So now I got an expert coming on. Gonna provide y'all some value. Give y'all all the game y'all need. I'm gonna let him break down his story and his background real quick for y'all. So first off, though, how you doing, brother? How you doing, man?
I'm doing pretty good, bro. No complaints, man. Just trying to, get better every day, man.
Yes, sir. And another thing I want to say, man, I met you at we just had an event out here, networking event, not too long ago out here in Dallas a few weeks ago. Boston Brunch. Met this brother out there. And from Rip, he ain't gonna hesitate. He gonna, this is what it's all about though. Getting in the room. And that's what I tell people a lot of times on the show. Just get in the room. That's the first step. And after that, just see what happens. So this brother gets in the room, man. He connected with everybody. I don't know if he already knew him or not, because I barely knew anybody in there except for like previous guests. But just introduce yourself, tell them what you do, and just go from there. And I met a lot of people there, and this brother was one of them. And he was reached out. He does insurance. Hey, get you on the pod, bro. And simple as that. That's how you make connections. That's how you get value. I give him a platform to talk about what he does, and then he can come on and give my platform value by just dropping y'all with some free game. So we're gonna go and get into it, man. How I normally start these off is just give everybody that may not know who you are a little brief background about yourself, and you come up. It's entrepreneurship.
Most def. So, like you said, my name is Brandon Thomas. And I own a insurance agency out here in Austin, Texas. We focus on life and health insurance for individuals, families, and businesses. And we are also, although we're here in Texas, we're actually in 10 other states in the country. So basically what we do is, try to, explain to our clients that, specifically life insurance is really like the easiest way to pass on generational wealth, and to keep your family from inheriting, any type of financial distress. So how I actually got my start, I was actually, I had dropped out of college after my freshman year. I did my sophomore. I was barely going to class, but I somewhat did the beginning of my sophomore year. Ended up stopping, before the semester was even over. Got to work in fast food. Really went from job to job. Never really made no more than like $11.50 an hour, and I started listening to other podcasts where I was hearing black folks that weren't athletes and entertainers that were finding success in America. I started reading certain books that started changing my mindset, and after some other failed businesses, getting into forex and trying to wholesale real estate and trying to become a real estate agent and, other affiliate marketing things. I got my insurance license, started seeing a little bit of success. And I was like, man, you know what? I feel like I can take this and, do some big things with it, man. So like I said, man, I loved getting compensated to, actually, help people out, play a small role in making sure the next generation, has some type of privilege.
And how long? You're a full-time entrepreneur. How long you been a full-time entrepreneur?
So, and I love that question, man. So I've been a full-time entrepreneur since May of 2018. And when I quit my job, let me see. I think I was 22 years old. I quit my job. I didn't even have a plan, and I think how they say you want to save up, like 6 months.
Yeah.
I didn't even have that. I think I might have had like $800. But like I said, I was getting all of this information, and I always had grit, I always had good work ethic. I never really had to be micromanaged. Matter of fact, I would show up to work early, and clock in early. That way I can make sure I have some overtime on my check. You know what I'm saying? So, like I said, I'm learning all these things. And I was working at a restaurant doing commissary. So I was like, making sure the food was good. I was, washing dishes and stuff like that. And I was like, man, obviously I don't see myself having a future here. So one day, one of my assistant managers came and pulled me to the side. and basically said that I had some coworkers that um, didn't like me and was lying on me, and had the general manager thinking some kind of way. So I actually finished that shift, and I was thinking to myself, I was like, man, before I finished the shift, I was like, man, should I just walk out right now? Should I put my 2 weeks in, or should I just not show up the next day? And I just finished the shift, didn't show up the next day. I think I was making like 11.25, something like that. I was like, you know what, I can just Uber, until I find myself. And like I said, I got into a few other ventures, even some after I got my insurance license, but um, insurance was the only one that really seemed to click, and something that I actually like enjoy, doing. So, but yeah, it's been I'm in my fourth year. I just made 3 full years a few months ago.
First off, man, congratulations to you on that. That
Thank you.
it ain't easy. I still ain't stepped away from my job. So everybody that come on, and you still super young, man. So just first off, shout out to that, brother. And if people don't get nothing out of anything he just said, there's two things to take away from that. First off, a lot of people get this like misconception that, oh, I could just go start entrepreneurship, go be in charge of something, be the CEO or something, and just go. And one thing about you, in your story, for one, you was a good employee. So it's not just like a lot of people have that misconception, like just because they're not the best employee, they can just go and say, well, maybe I'm supposed to be the business owner. Nah, sometimes it's like you need to be a good employee. You need to understand what it takes and the grind you got to put in doing something to understand like what it takes to run something, or what it takes to execute and do certain job duties or roles. So understand that like it's not always about the people that just oh, this ain't for me, I'm gonna go do this. Like this man was what you want in an employee. But also
Exactly.
on top of that, another thing is consistency. Like, yeah, he might have tried a bunch of things, but at the end of the day, he ain't just give up on it. Like he ain't just quit
Yeah.
and just be like, nah, this ain't for me. If it wasn't for him, he found something else. And
Something else. Yeah.
you just gotta keep going until you find the
Facts.
thing that stick. And that's what people often they mess up at. Like just and for one, they don't try something long enough to even like it may be for you, but just like I tell people, like just because things seem simple, that don't mean they're easy. So you gotta understand, like
Exactly.
sometimes you're gonna have to put in some work and grind, man.
Yeah.
And if it was easy, everybody would do it. But salute to you, man. That's just admirable. The fact that you just stuck. Even though everybody go through challenges and shit and stuff like that,
Oh yeah.
but you was able to stick to something, find something that worked for you, and on top of that, you found something that you actually like. Like a lot of times, people don't even find
Exactly.
what they actually passionate
Like,
about.
yeah.
So you was able to find something that paid you and you was passionate about it. So
Yeah.
let's just go ahead and get right into it, man, because I don't know too much about this insurance. So just what do you do? Like I know you're in insurance, but like what kind of insurance? 'Cause I know they got life, health, they got all types of different insurance. Like what kind of insurance do you like work with?
So I specialize in life and health insurance,
Okay.
and also group insurance for like business owners. So if I had like a guy that was like, man, I got 12 employees that I want to give benefits to. That's the type of stuff that I
Okay.
do. But I'm mostly focused. I will say most of my focus is on the life insurance side. So I'll say I
Okay.
definitely have more clients on that side.
All right. Now, a lot of times, people have this thing like everybody thinks that insurance ain't worth it until they actually need it. Like I'm guilty
Yeah.
of it. Everybody's guilty of that. Can you just kind of break down some of the benefits? What kind of focus specifically like right now? Whatever you want to talk about, life, health, whatever. But just kind of break down some of those different benefits of the insurance that you provide for people.
So speaking on the life insurance, yeah, you don't want to wait till you actually need that, because by the time
Yeah.
you need it, it's too late. You know what I'm saying? So, but but yeah, on the life insurance side, those are coming with death benefits, which is the most common thing. Of course, you put a certain amount on your life, whether it's 50,000, 100,000, half a million, a million, or whatever. And whenever you pass away, as long as you keep your policy active, then your beneficiaries inherit that money. But there's also living benefits to life insurance too. Especially something that our community needs to know about is so on life insurance policies, really on all of them, doesn't matter if it's term or permanent insurance, they come with something called an accelerated death benefit. So, God forbid, to you or anybody listening to this, but if you were to contract, like a heart disease, a cancer, stroke, something like that, you can use your life insurance policy, some of that money to take care of the medical cost. The reason why I say that is, our community is kind of high in, um, certain medical conditions. So instead of let's say, for example, if somebody had to go through chemo, right? Let's say chemo's like 40, 50,000. Instead of you having to touch one of your investments, or you have to go touch your savings, or you got to go, into medical debt, you have a life insurance policy that can cover that for you. So a lot of people, they don't know that. So the death benefit is, one of the most important things, but also that living benefit as well, that, most, if not all, life insurance, policies actually come with. So
Okay. Now, I kind of done a little bit of research here and there on life insurance. Like I got the one like I know about usually at your job, you 9 to 5, whatever wherever you work. Most of the time they offer you some type of I guess life insurance. But what like I've heard of, you got term and whole life. Like what are the different types? Okay, you kind of just break that because I don't know how many they got or like what they
okay,
do or what they cover. So you gonna break that down?
that's a good question. So before I get into the difference between those, I will say that if you do have life insurance at your job, those are going to be term insurances, right? So with those, if you get fired, if you quit, you get laid off, that policy is not going to follow you. So what I always tell people is it's always smart to get your own personal life insurance, because especially if you're somebody that works for a job for so long, people do get laid off 20, 25 years in, and you don't want to wait that long, to get a personal policy, because you'll be older, you might have health conditions, or whatever. But the difference is, so basically in the life insurance industry, you have term insurance, and then you have permanent insurance. So permanent insurance would include whole life, which is going to be most popular. You got universal life, index universal life, variable life.
Oh damn.
Yeah, you got 15 pay whole life, 20 pay whole life. But speaking of, because I mean, most of those they're gonna have most of the same similarities, some differences. But so when it comes to term insurance, like I said, it's most popular. It's also going to be the most affordable kind of policy to get. So that kind of policy allows you to get more coverage at a cheaper cost, compared to getting a permanent policy. And like I said, term insurance does come with those living benefits that I said earlier. Depending on what life insurance company you go with, you can also convert a term life insurance policy into a whole life or another permanent policy as well. And then also, depending on company, some of the terms may come with guaranteed renewability, meaning that, let's say you're 25 years old, you get a 10-year term, it'll be the same price till you turn 35, and it'll automatically renew, if you want it to.
Okay.
So you don't have to, go through the process, fill out any more paperwork, but the price will increase, because now instead of rating you at 25, they're rating you at age 35. So, and that counts if you get a 10-year, 15, 20, 25, 30-year term, because they come in those terms. You might even also find some companies that might offer 35 and 40-year terms, although it's rare. Um, but I like selling term insurance. Well, I like selling all kinds of insurance. But yeah, that's pretty much it on the terms. Um, Now permanent policies, I don't want to get into like every single like one of those I just named, because
Yeah.
I could go on all day. But with permanent insurance, basically you're locking your premium in to where it never's going to increase. As long as you pay the premium on that policy, it'll last you your lifetime. Now those permanent policies will come with the same living bit. I'm sorry, same living benefit that I talked about before, as far as like the medical conditions. But permanent policies also come with something called cash value. So basically, as you're paying your premiums every month, some of that money is being put into it's an account that's tied to your life insurance, but it's something that'll earn interest annually. Now, sometimes that interest can be ran off of like a insurance company decision. So they can give you 4%, 5%, or whatever. And then some other permanent insurance will allow you to tie your interest rate to a market index like the NASDAQ, S&P 500, the Russell 2000, and then you could get and then you could get like an interest return, off of that.
Oh, so you mean tell me like I could take? I guess you paying for your. So this is the permanent. So
Permanent insurance, yeah.
you paying for your insurance, and you could tie it. So you have a cash value, I guess, attached to that, to where
Yes.
you could actually get money to invest with.
Yeah. So with those, you're not investing directly into, for example, let's say, we got a permanent insurance policy and we tied your interest rate to the S&P 500. Now, you're not investing your money directly into the S&P 500, so it's not like you're investing into a mutual fund. They're just giving you an interest rate based off of that. So what they do is they basically give you a cap rate and they give you a floor rate. And usually the cap rate will be around maybe like 10 to 15%. Floor rate is usually going to be 0%. So if the S&P 500 did like 30% for the year, but your cap rate was 10, then you'll get 10%, on your money. On the other hand, if the S&P did negative 30%, you floor out at 0%. So the only caveat to those is there might be a year where you don't get any interest. Um, and then also with life insurance, really on the term and the permanent side, there are tax advantages. So the death benefit that your beneficiaries receive, Uncle Sam doesn't touch that. The capital gains that you build off in the equity in your policy, Uncle Sam doesn't touch that. And then also the money that you can either withdraw or you can take a loan out against. Right, Uncle Sam is not touching that. So
Wait,
some people
hold
look at
on. Oh man, repeat that. Repeat that part. I'm trying to grasp this.
so as you're building up equity in your policy and you start taking withdrawals out, Uncle Sam cannot touch that money. So if you compare that to like a 401k, 401ks are tax deferred, meaning that you don't have to pay taxes on that money as you're putting money into it. But as you start taking that money out, it's going to be taxed as ordinary income. So a life insurance, there are no taxes on there. Um, and then also, like I said, you can withdraw or you can take a loan out against your money. So if you have, let's say you got $50,000 in equity in your policy, right? And instead of withdrawing it, you want to just take out, let's say you want to take out a loan of 25,000 because you want to go buy a rental property or you want to go start a business or invest in somebody else's business, right? You can do that. And the difference between doing it with a life insurance policy and the bank, there's no credit checks and then there's no required payback dates. So if you go to the bank, you get a loan for 25,000, they're gonna say, all right, hey, you know, uh, we'll give you a 30-day grace period. After that, you gotta start making payments, right? Life insurance is not gonna be like that, and then the interest is gonna be very very low as well. So that's another good thing.
And so you basically paying your policy back. You're just taking it from yourself.
Basically, you
Oh,
take
so
from
this is
yourself, yeah,
almost
yeah,
like it's almost like a Roth because that's kind of how I use my
something like
Roth.
that.
Okay.
Yeah.
So hold on,
So
you can withdraw money from your actual life insurance. Like, does this like a specific one or is it any of them?
it's any. Yeah, you can do a whole life, universal life, index universal life. Variable life is a little bit. You can do it, but it's just a little bit different setup. But um, but yeah, man. Another
Oh damn.
demographic of people. Another. I don't want to say it bluntly, but another demographic of people been doing this for a long time, and
Yeah,
that's
go ahead and
why.
say it, man. Yeah,
Oh,
white folks been doing it.
white folks been doing this shit for a long time, bro. They've been doing this for a long time, bro. You can look at businesses,
Damn.
man. Look at see, people don't know this. You can go back and look at Walt Disney's story. He was paying his overhead and paying his employees off of his whole life policy. Same thing with J.C. Penney. They use these whole life policies to build their brands up. Same thing with I can't think of their name. The McDonald brothers. They did the same thing. So, like I said, man, life insurance is way more powerful than just the death benefit is highly important because like that's the easiest way to pass on wealth.
And
But it's way more than that.
And so, okay, I'm just that death benefit. Like, what? Okay, let's say hopefully nobody die, but like you die, you got like $1 million life insurance policy, and I guess this would be the permanent, so that would cover like your entire life or whatever. Let's say you die, so that million just go to whoever the beneficiaries are on your policy, and it's just free and clear.
Free and clear. As long as so in life insurance, and it's not going to depend on the company. It depends on your state. So every state usually is going to have a it's something called a 2-year contestability period. And what that is if you have a life insurance policy and you die within 2 years, the life insurance company can investigate just to make sure you didn't lie on your application, and just to make sure that the death wasn't due to, because they don't pay out in the like suicides. They don't pay out, um, or the commission of a felony. So if trying to go rob a bank or something, you get killed while doing it, they're not going to pay out. And then also lying. So there's certain questions that they may ask. For example, life insurance companies will ask stuff like, do you rock climb? Do you surf? Um, do you go bungee jumping? Stuff like that. So if you say no, and then you end up dying to one of those and they find out about it, then they're not going to pay. But if you have a life insurance policy, you told the truth, you want to make sure you're dealing with a broker or agent who's also honest, right? And let's say you pass away in from a heart attack or from a, car wreck, then yeah, they're paying out that full amount.
Yeah.
So, but then, and then also to say, it also depends on the type of death benefit that you have, because with life insurance, you have three types of death benefits. You have a level death benefit, meaning that that'll be an immediate payout. You have a graded death benefit, meaning that if you die within 2 years of having the policy, instead of them paying out the full death benefit, they're just going to give you your premiums back. But those are more going to be associated with final expense policies, which are for like older folks. And then you have another death benefit called an increasing death benefit, and those are going to be tied to permanent insurance. So it's basically as your cash value is growing, equity in your policy, you can basically you tie that to your death benefit. So if you pass away without touching none of your equity in the policy, then your beneficiaries can inherit that as well.
Yeah. So I mean, so it's not like you ain't like people with a grandparent or something. They ain't gonna go take no life insurance policy on them, knowing they about to pass away soon or nothing like that. Ain't happening, right?
Yeah.
People crazy
Well,
nowadays.
no. I'll have people. I'll have people that'll do that. But like I said, um, anytime I have, for example, let's say you reach out to me, you say, hey man, I want to put, this policy on my grandmother. I will say, okay, but she has to know about it, because I don't want to get in any kind of trouble, because, they be having, I mean, I don't watch it, but I've been sitting with my mom sometimes where she'll be watching that show called Snapped. And then,
Yeah.
people
No,
be,
that's what I'm saying. Like,
yeah,
I just like I'm curious because I'm just like, well, the way this somebody crazy just go take a term
yeah, I
insurance
don't want to,
policy out on their grandparents or something, man. I'm just like, they
yeah,
just come
I
up on a
don't want to
whole
be.
lick.
Exactly, and I don't want to be. I'm not trying to be involved in nothing like that. And
Okay.
that's also where that contestability, period comes in too.
Okay.
Because if they figure out something like that, then you know. But I think our not too long ago, didn't some rapper, some like small time rapper, like kill his mother for like $500,000 policy or something like that?
Man, I don't be keep up with this stuff. This stuff just all these things you telling me, guys.
Yeah,
Like people, it make a lot of sense when people be coming up missing and all type of
yeah,
stuff. No, that's crazy because I never knew that. I didn't even know you could take out like I think I heard about it recently, and that's why I was happy when you reached out because I was like, okay, I could actually get some like real information on this about like being able to like borrow against your life insurance and all that. Like I didn't even know that was a thing. Like I guess that's a big thing. People always think. And you can speak on your opinion. Like I guess when people think about, oh, let me get life insurance, like, well, this is the one thing that'll never actually benefit the actual person. Like, a lot of times that's the thing that people think about, like, this is the one thing I'm gonna buy that's never
yeah,
gonna directly benefit me. So what's the point? And I feel like that, especially
yeah,
the black community, that's a big thing. Like the how we act. It's just like, okay, well, this ain't gonna impact me, so then I don't even need it.
yeah. Well, that's what I'm saying. Even if you did buy term, you have that living benefit. So if you get sick, I mean, you basically buying medical insurance, because I mean, the average person doesn't have 40, 50 grand to pay for, like a chemo if they needed it, or some drastic surgery if they needed it. You know what I'm saying? So, and even if you did have that money, I'm pretty sure you wouldn't want to spend 40, 50,000 on that.
And so life insurance help with that too.
That's what I'm saying. Yeah, yeah, yeah. You cover them only if it's a terminal. It depends on the policy that you have, but they could come with like a terminal illness, critical illness, and a chronic illness rider. To where if you get one of those three, like I said, cancers, heart disease, Alzheimer's, like stuff like that, then you can you can reach in and touch, but it's only to pay for the medical costs. It's not to like cover like your like living costs and stuff like that. So
Okay.
you have to like show proof of like, hey, I need $35,000 for, this surgery or whatever, or this treatment or whatever.
Okay. Now, can you just kind of break down like what goes into like when you have a client or whatever, and you talking to them? What is the process that goes into getting them, I guess, approved to get their life insurance policy? Like, what is like they have to go to the doctor? They got to fill out certain paper. Like, I don't know.
Most definitely. Okay, so I'll just take it to the beginning. So what I do is when I sit down with somebody, what I want to understand is where they're currently financially at and where they plan on financially being in the future. I want to know, if they have a family or not. Because what I do is I basically sit down and depending on how a person answers those questions is when I would advise, hey, I would go term, or hey, I would go permanent, or I might have somebody just reach out and say, hey man, I heard about this policy right here and this is what I want, and then we'll do some consulting about it. But after we decide what policy will fit them after the quote and stuff like that, you have to do most times nowadays, especially with COVID happening, it's going to be an electronic application that you have to do. Now I know very seldomly I do have to do paper applications, but I still like DocuSign stuff. So it can be paperless. Um, but what they do is basically submit an application, and life insurance companies basically what they do is they underwrite you. So for most companies, and this is not going to be for every kind of policy, but for most companies, when they're looking at your application, they're looking at your criminal history, your medical history, your driver's history, your tobacco use, and then your height to weight ratio. So that's when they, decide if they accept you, if they decline you, or if they accept you but they up the premium. Um, but some people will have to do like medical exams where they go and they'll check blood and urine for cancers, HIVs, make sure you're not doing any type of like hard drugs, stuff like that. But as long as you're clear on those five factors with the underwriting, as long as you can get through the medical exam, then you will be approved. And even those medical exams, some policies don't even require it. So I'll say for like young and healthy people, like if you've never had like a serious medical condition, or you never really had to take any type of like serious prescription, you could get accelerated underwriting to where basically um, you fill out an application. They might do like a phone interview, or they might, send you an email for you to like fill out some questions. And then you can get approved within like a 72-hour period, instead of having to do the medical exam and then wait for them to get the results back, and then, all that good stuff.
And so, real quick, because this is your like, what's your, I guess, favorite or preferred product or like insurance that you like sell to clients?
So I like selling term insurance because I sit with a lot of entrepreneurs that are kind of like already well, like I said, it depends. Like I just say advise differently based where somebody's at in life. Like for example, earlier this week I had a guy reach out to me, and he was like, yeah dude, man, I got like four properties, I got a trucking business, I just retired my wife, And I just told him, I was like, hey man, you really should just get term insurance because you can get more coverage. It'll be cheaper. And then, the money that you would be end up putting, into a whole life if you were wanting to do that, you just put those funds to reinvest in what you already got going on. So, like I said, I love selling terms, but when it comes to permanent insurance, I like the index universal life insurance because with those, like I said, that's the one where you can tie your interest rate to a market index, and then on those you also got flexible premiums as well. So they'll give you like a minimum, which let's say the minimum is like $100, and then they might give you like a max of $400, and basically every month, you have a choice of what you want to put into it. Of course, the more you put into it, the more you get out of it, just with any kind of investment. But um, I do prefer those when it comes to like the permanent. I'll sell that way faster than I'll sell a whole life insurance. I wouldn't even look at whole life. People don't even want to look at whole life after you show them index universal life insurance policy.
Okay.
I'll
And
say that.
I guess so what's like the ballpark range, I guess, price wise for like I guess since you do term, let's say for like I guess because it's specific like a healthy like let's say mid like between 23 and 30 ish type range, like low
Okay.
late 30 early 30s. What would somebody be like expected to pay?
Well, if we're talking about male, so when it comes to women, if you have a woman and a man that's the same age, a woman, her premiums are always going to be cheaper, sometimes even drastically cheaper than males because women are expected to live longer. Um, but if I was talking to, let's say I was talking to a 30-year-old male and he needed, $250,000, insurance. I mean, I could find him something for less than $30 a month.
Oh, okay. All right, yeah, I
Yeah.
ain't bad at
Now,
all.
if he needed that same type of policy, but he needed it on he was trying to get whole life or index universal life or another permanent policy, then he'd probably be looking into that maybe like I would say maybe like 150, like 250 range every month.
Okay.
So,
All right.
but yeah, and also I forgot to mention. So I actually do something when I sit down with people to basically try to decide how much coverage they actually need, and it's called the DIME method, DIME, and acronym stands for the D stands for debt, the I stands for income replacement, the M stands for mortgage, and I know mortgage could be counted as a debt, but the DIME method sounds better than the die method, especially when talking about life insurance. You know what I'm
Yeah.
saying? And then the E stands for education for children and grandchildren. So those are just like four things that you want to just think about when you're purchasing life insurance. So, for example, how old are you?
I'm 28.
You 20? You got any kids?
Nah.
Okay, so if I was talking to you, what I would do is I would ask you, like, hey man, how much money are you saving every month, right? Let's say you're like, okay, hey bro, I can easily save $1,000 a month, right? And
Okay.
what I would do is I would look at, hey, let's get this permanent policy right here, you know, for 100,000, which would be the minimum, and for you to be 28, I think the minimum premium probably be maybe like $80. The max will probably be maybe like 300 or 400. And I would tell you, I'm like, hey, bro, you can just start off paying the minimum. But if you could, just put as much money into that as you can, and those death benefits grow as well. So by the time you start having kids, it might have. I guess it depends on what age, but it could have grown from 100,000 to 150,000, and if you were to live into your 70s, 80s, to grow from 100,000, maybe even upwards of 500,000. So, but if I'm talking, like I said, if I'm talking to somebody and they're like, man, I got all these rental properties, I got all this stuff going on, then I'll be like, hey man, you probably just want to get a term because you already got so many responsibilities. You got kids, you got properties, so you don't need to start off with a $100,000 policy. Or if they could afford, if they like, if I was sitting down with them and I say, hey man, you really need to get a $500,000 policy, right? If you get it with term, let's say I'm talking to a 40-year-old guy, which I actually did on Monday. I got him a $500,000 term, and I don't even think he was paying $50 a month. Versus if he got that $500,000, whole life, he'd probably be paying in that $300-400 range. Which, if he if that's what he really wanted to do and could afford it, I'd be like, all right, hey, well, let's do it. But I would have just advised get this term, man, and you get to take the rest of that money and you know keep putting it towards the business that you have and saving up to buy more properties or saving up to invest in crypto or whatever
Yeah.
people want to do.
And so you still got the option though, like I guess it's just with the permanent, like to take out a loan against that still from what
Yeah,
you
yeah, but
invest.
you have to have the equity in the policy. So you can't start a insurance policy the same month and say, oh,
Oh yeah,
hey,
yeah, yeah.
yeah, can I borrow 20,000 from y'all? Like, no,
Got
I
you.
don't. It don't work like that.
Yeah, what
You
you
have to
put in is what you can borrow against.
exactly.
Okay. All right. Hey, definitely. Real quick, I want to kind of get into like how does this work? Because you say you work with businesses as well. How does that
Mhm.
whole insurance piece work when you start talking to like businesses?
Bro, that is a great question. And if you didn't ask that, I probably wouldn't even gonna bring it up. But especially to your listeners, so when it does come to businesses with the life insurance side, they have something called key man or key person life insurance. And basically, like let's say you have a business partner or you have an employee that is very integral to your business, right? You can take out a life insurance policy on them, and the difference between that and a personal policy is, yep. So like you could take out a policy on your business. Let's say you got a business partner. Well, let's say both of
Yeah.
y'all. Let's say we get one policy of both of y'all on there. Now, instead of an individual owning the policy is owned by the business, right?
Okay.
Instead of the beneficiary being the individual, the beneficiary is the business. So the only difference is that instead of them writing a check to you, they're going to write a check to Wealth for the Culture LLC for you to, of course, you really can do what you want to do with that money, but the funds are intended to, keep the the business from going under. So that's something that you can do, and I actually I do that with a lot of businesses. So if I notice somebody has a business partner, I would just ask them, hey, how would y'all's business go if that person wasn't here. And then even with those same features on the living benefits. So if you had a business partner that got sick, right? Let's say he had a stroke, right? And he couldn't work for 6 months. So he has that. You have that money to. Well, I mean, with that for that, I mean, you of course would be using those funds to you know, pay to make sure he or she is better. But that would be better than using y'all's business profits to have
Yeah.
to cover that and then going under and stuff like that. So, um, but yeah, like I said, that's called key man or key person life insurance.
I'm glad you hit on that because I didn't even know you could do no stuff like that.
Yep.
So real quick, because you said you're licensed, can you just kind of briefly talk about the process to become a licensed for anybody that may be thinking about taking this route?
So I know. So what I did was I had got recruited by an MLM. So
Okay.
I got recruited by a network marketing company, but I just left because I didn't like their business model. I didn't like the recruiting. I didn't like the incentivized recruiting. I wanted to do something that was based on sales and customer service. Um, but you can get recruited by MLM if you have a finance degree or like a business degree. I know like some of these companies like Edward Jones or Charles Schwab, they'll recruit you and then they'll pay for your licensing and stuff like that. Just like those MLMs will pay for your licensing. Um, but and I don't know how you can do this, but I know it can be done. But you can just go and take the test. You probably just want to hit up the Department of Insurance and just ask them, hey, how can I get licensed? But you just have to pay for everything out of pocket instead of somebody doing it with you. But I know when you do get a license, that's really just like the beginning part because you got to get appointed with some of these companies. You might have to get appointed with like a middleman to get to some of these companies since you're new and you're not doing, a certain amount of, you're not producing a certain amount of premium every month. Um, but it's not hard. The test was like I think the test was like maybe 150 questions or 100 questions, something like that. Um, I think I passed with like a 72. So you don't need a college degree, but you do need like sales skills and stuff like that. So, but it's definitely not hard to get into the industry. And actually, right now, for anybody that is listening, um, if you do have a license, I am offering independent contracts. So, I mean, you wouldn't be working for me. I would be providing, training and support, but you would, really just be on your own, selling, the products that you would want to sell.
Okay. And about how long it take you to like get up and going, like just far as getting the license, like studying, taking the test, and all that.
Bro, it took me maybe like 2 weeks of studying. Then
Oh, okay,
yes, bro, it's not hard. I mean, somebody probably could study in like 3 days if they really wanted to go take
okay,
it. It's not hard, but it's just the hard part is staying consistent, going through the bullshit, and then basically just finding your target audience. Um, and I mean, yes, that's really the hardest part. I mean, getting a license is that's nothing.
okay. All right, well, that's an avenue for somebody, man. If y'all want to take advantage of that, to look into it, go ahead. And I just want to thank you, bro, coming through. I got one more segment. I do talk to the culture. Run off 5 questions, answer them best you can, and we can wrap this thing up. So the
All
first
right, look.
question is, what does wealth look like to you?
So wealth to me looks like having enough assets, having enough influence to where when I have a son, he doesn't have to like struggle to go to college. Like college is more of like that's like your last resort. Like, oh damn, I got to go to college. Like that's like your last resort. And then I don't ever want my son to have to, you know, be online like, complaining that he can't find a job or because I see people talk about that all the time or, dealing with racism at the workplace. I don't want my son to have to deal with that. You know what I'm saying? I don't even have kids. I'm just thinking like forward. I don't want sons, daughters, anything. But wealth to me just having opportunities to give to others, to where they don't have to, you know, they can depend on the family, they can depend on themselves to eat and not, like a another man. So that's why I make so many sacrifices right now. 'Cause that's my biggest goal.
For sure. Next question. Just give me one book recommendation.
Man, hold up, bro. I gotta go. I'm gonna go get the book in case you post this on YouTube. So this book right here, man, Think and Grow Rich, A Black
Okay.
Choice.
Yeah, I'm reading that actually now.
Bro, this book, like Rich Dad Poor Dad, that definitely touched me. And that really like started the revolution. But this book right here is a gem, and I definitely like recommend this to like I feel like all black boys that turn like 10 years old, 12 years old should read this book. Because I mean the reading I mean it's the reading material really isn't hard. It's not no like super big words and nothing like that in the book. But it's so much game, just about successful black people that aren't, entertainers and athletes and stuff like that. So yeah, that's something I definitely recommend.
Most of it, and that's a good ass book because I'm actually in the process of reading it now. I read the original Think and Grow Rich, and I found out about that one after, so I'll
Yeah.
start tapping in with that. But
Bro, I never finished reading, bro. As soon as I had bought the regular Think and Grow Rich, I might have read like one chapter and then I saw this one and I was just like, no, I'm gonna buy this one and just read that one. So I haven't even read them. I haven't read the other one.
and because this podcast is all about black people, man, I always ask everybody, what do you think is one thing that the black community needs to improve on?
Definitely financial literacy. And then also like not being so judgy, like and then not letting, certain like topics like divide us, like politics and I don't know, sexual orientation, religion. Like I feel like our like race, our group should come before any type of like belief. You know what I'm saying? So And then, like I said, financial literacy too, man. We need to do better. Start thinking more forward for the next generation, and not just being selfish and thinking about ourselves.
Sure.
And
And next question I got: what's next for you, bro? What's next?
so right now, bro, like I said, man, I'm just scaling my business, dude. I'm 10 toes in. Um, Anything else right now is a distraction. I'm not trying to get into no other kind of business ventures. Um, I'm at a point now, it's like where I said earlier, I'm actually giving people, opportunities to go out on their own, to help, families and individuals with their life insurance needs. Um, and then soon, I actually want to, actually start hiring in-house building like an in-house sales team, because I got everything else already like outsourced or like people hire for. So, but yeah, man, just trying to
Okay.
just grow this brokerage, man. It's my only focus.
Sure. And last but not least, plug yourself. Tell everybody how they can find you, where to find you on social media, all that.
Okay. So on social media, my insurance handle is going to be BT Insurance CEO, and that's BT for Brandon Thomas. So BT Insurance CEO. On Instagram, it's BT Insurance, and my social media managers actually run my Instagram. So you actually won't see any post of me on there. It'll just be like different like information about life insurance and different marketing posts, stuff like that. I actually do have a YouTube channel. What I do there is every Wednesday I just drop a new video, on like a different topic that'll help people out, when they're in their life insurance buying process, and that is BT Insurance TV. And then for anybody out there that's listening that might be in need of life insurance, you can visit my website at bthomasinsurance.com, or you can reach out at 512-549-6123.
And I'll have all that in the show notes for anybody that's looking for it. But one thing I want to do, man, I want to thank you for coming through, man. Thank you for dropping these gems, dropping this knowledge on the people, bro. You didn't have to do that, and I appreciate you for coming through, man, and dropping some, valuable knowledge on the platform.
I appreciate you, bro. And it was nice to meet you too, man.
Yes, sir. And like we always say on this show, man, we're good at success if everybody around you is still struggling. Each one reach one, each one teach one, man. And we are out.